has introduced new rules for index futures and options like Nifty 50, Bank Nifty, Sensex and more. From November 2024, the lot size for the index derivatives has been revised. That's right, the bigger the lot size has just come up. What does this mean to your trading strategy? Will we require more capital? What happens if your positions are in odd lot size? And welcome back to our channel, and in this video I am going to break down all those things in detail. So without any further delay, let's get into the video. Now let's start it with Nifty 50, one of the most traded indexes. Currently for the monthly contract of Nifty 50 is around 25 and now it has been increased up to 75. So if you are trading in Nifty 50, your positions has just tripled up. The next one is Bank Nifty. The monthly contract for Bank Nifty is around 15 and now it is going to change into 30. So if you are trading in smaller positions, then now you want to adjust your positions based on the revised lot size. The next one is Fin Nifty. Currently for the monthly contract of Fin Nifty is around 25 and now it has been increased to 65. The next one is Mid Cap Nifty. The current month lot size is 50 and now it is going to increase to 120. This change is going to impact the traders who has been focused on mid-cap Nifty. This change is going to make a great impact on the traders who has been focused on mid-cap stocks. And now you guys have to adjust your positions. The next one is Sensex. The current lot size is 10 and now it has been increased to 20. So if you are trading in Sensex, then the positions has been doubled. If you are trading in Sensex futures or options, then your positions has become doubled. The last one is BankX. BankX current quantity is 15 and now it has been changed into 30. Now you will have the question like when all these changes are going to come. Now you will have the question like when exactly all these changes is going to come into effect. So here is the key important dates that you should be remembered of. So Nifty 50's weekly contract is going to be revised from January to 2025. Now the Bank Nifty's revised quantity will be from February 26, 2025. Sensex changes to quarterly contract and has been revised from December 27, 2024. The next one which we are going to see is margin impact and risk management. From December 20, 2024, if you are holding your positions in odd sized quantities like 1, 3, etc., then you should revise it to the new quantity, or else you will face an additional 5% of margin requirement. If you don't adjust your positions based on the revised lot size or maintain the necessary margin, your positions will be squared off to maintain that new lot size positions. So why SEBI is making all those changes? The main reason is to improve liquidity and volatility in a standardized manner. By increasing the lot size, it ensures that the participants will have minimum contract of value 15 lakh rupees for each index derivative contract. These changes will attract more institutional investors and traders who are ready to invest in large quantity. For individual traders, it is important to understand the financial implications in that contract. For individual traders, it is important to understand the financial implications because of the increased lot size. These changes are going to affect for everyone who is trading in large quantity or the beginners. If you are trading in Nifty, Bank Nifty, make sure you understand about the revised lot size and adjust your positions. Don't panic, still you got time to adjust your positions. So double check your lot size and adjust your margin and stay informed. Hope this video finds useful for you. For more such videos and updates, don't forget to like, share and subscribe to our channel.
Trading and investing involve substantial risk and are not suitable for every investor.